Good morning to all. This class we will discuss about financial analysis in project. When an organization receives a project, it is necessary to find out how worth it will be for the organization in terms of finance. To calculate how much of cash flow the organization receives throughout the project, then only the shareholders get benefit and again they are invest for the next project. Next we will discuss capital budgeting. It creates accountability and measurability. If any business start before the shareholders or owners to analyze whether the project it will be get good benefit and revenue based on that financial analysis. So otherwise they lose that invest amount. So that's why any business that seeks to invest its resource in a project without understanding the risk and returns involved would be held as irresponsible by its owners or shareholders. Given some techniques regarding capital budgeting like payback period, discounted payback period, net present value and profitability index. Next we will discuss payback period. In the payback period, time required for the return on investment to repay the sum of the original investment. Generally, we invested amount to the particular project. In the payback period is used to calculate how much month or years to take that investment amount for the particular project. Project with the least number of years usually is selected. There are two cases in payback period: even cash flow and uneven cash flow. In the even cash flow, each and every year cash inflow are equal. So initial investment divided by cash inflow per period. In uneven cash flow, the every year cash inflow are differ. So with the support of following formula, we find out that uneven cash flow. Payback period equal to A plus B by C. The details were given regarding to find out that uneven cash flow. Next, discounted payback period. In this discounted payback period, we consider present value of money. This is differ from that payback period. In payback period, we are not considered present value of money, only how much amount we invested, then how much years it will be take. We won't consider that present value of money. Here we consider the present value of money. Discounted payback period gives the number of years it takes to break even from undertaking the initial expenditure by discounting future cash flow and recognizing the time value of money. First, we find out that present value of money from that cash inflow. After that, you have to take that cumulative. Then you have find out that discounted payback period. Next, we discuss net present value. To determine the current value of all future cash flows generated by a project. To establish which projects are likely to turn the greatest profit. Present value equal cash flow divided by 1 plus I whole power n. Cash flow is nothing but cash flow in the time period, which year you have to consider. You have to choose that particular year, like first year or second year. I discount rate, n time period. So net present value, find out total of present value minus initial investment. If consider two projects, finally have to evaluate net present value. Which one is maximum value you get with the support of formula. you have to choose that particular projects. Next, profitability index is used to rank the projects based on the profitability. Profitability index calculated total present value divided by initial investment. Projects with higher profitability index are better. If you taken that two projects, which one is a higher one, profitability index, you have to choose that particular projects or consider the particular projects. Advantages of capital budgeting. To understand the various risks involved in an investment opportunity and also how this risk affect the returns of the money. Then to estimate which investment option would yield means to get good and best possible returns with the support of capital budgeting techniques, payback period, discounted payback period, profitability index, net present value. Have to find out which project is good or choose the right time, and also to get that money in a very short period or very early. So these are the advantages of capital budgeting. Thank you.